Okay, well, the work that I do is very much bottom-up based, so we don't look at big themes and play big macroeconomic themes or long-term trends. We'll just take stock by stock, each one by one, and try to find often stocks that are misunderstood by the market. They're simply misvalued because they're not properly understood and then valued by the market. So, one example that I've entered the portfolio recently is a company called Patrizia Immobilien. Traditionally this is a German real estate business. They've had quite a checkered past. The previous model of the business was basically a trading business almost. They would buy entire properties and then they would cut them up into apartments and then resell them. This was financed with short-term debt, and this clearly did not work very well in the financial crisis. So the share price crashed. A lot of people thought the company would go under, but actually they managed to navigate it quite well. They came back reasonably well, and since then they've deleveraged. They didn't raise any capital from the market. They managed to get out themselves, and even throughout the crisis, they managed to sell the properties they had bought at premiums to the purchase price. So despite the crisis, they did quite well. Since then, they've changed the business model, and it's moving towards being an asset manager. So with the equity they've raised from selling down the property base, they've gone to big institutional clients in Germany and said, we can co-invest with you, but then also manage the whole process. So we can source the product for you, we can structure the transaction, and then we can manage that property on an ongoing basis, collect the rents, etc., and work on improvements and modernization. And I think what the market is missing here is it still believes in the old model as being a sort of a property type business, but actually this is becoming an asset management business. So when I value this business, I believe the hard assets that it owns are worth approximately €6 a share. And then the value of the real estate, the asset management part, should be worth at least the equivalent, so another €6 a share. And the share price today is around 7, so I think you're buying at a big discount to the intrinsic value there. I also think this business will grow over time. They've gone from managing only 2 billion, 4 years ago, to managing 13 billion today. Now that growth rate should not be extrapolated because there are one or two very large transactions in there, and they won't continue to grow at that rate. But I think in 5 years down the road, this will still be a much bigger company than it is today. I also think they've got a competitive advantage because they co-invest with their clients. So when a client comes to them, they'll say, we'll source the product, but also we will put 10% of the equity into this project as well. It so happens also one of their major competitors in Germany, IVG, which is a big German real estate company, also asset manager, is having financial problems. So they're a little bit struggling. So I think this is also where Patrizia is gaining share today and growing quite quickly. It's owner managed, which is also something we'd look at for investments we make, that the interests are aligned between shareholders and minority shareholders and management.